I'm Caroline Woods, and this is your NYSE brief on the price-to-earnings ratio. A reminder that this is for educational purposes only. The New York Stock Exchange does not recommend any investments or investment strategies. If you want to invest in a company but are unsure how to determine whether its stock price is reasonable or expensive, some investors calculate its price-to-earnings ratio, or PE ratio, to help assess the stock's value. The PE ratio measures how much an investor is willing to pay for a stock as compared with how much it makes in earnings. The P stands for price, as in current stock price, while the E stands for earnings per share, typically from the past 12 months, but some investors also use estimates of future earnings. To calculate the PE ratio, simply divide the stock price by the earnings per share. So let's say you're considering investing in company X, which has a stock price of $20 and earnings per share of $1. That means its PE ratio is 20. So the stock trades at 20 times earnings. In order to determine whether a stock is cheap or expensive, an investor may compare the stock's PE ratio to that of similar companies within the same sector or industry. We'll compare it to company Z, which has a higher share price, $60, but earnings per share of $5. So its PE ratio is 12, which is lower. A low PE could indicate that the current stock price is low relative to earnings and possibly undervalued. However, some stocks may have low PE ratios because investors think they have limited growth potential. A high PE might mean the price is high relative to earnings and therefore overvalued. That said, some companies could have a high PE because they're expected to grow, eventually becoming more profitable. Sometimes investors are willing to pay a higher share price today because of future growth expectations. Let's go back to our example. If both company X and company Z are expected to grow at similar rates, then company Z could be a better value based on its lower PE ratio, even though its stock costs more. So remember, a cheaper stock price doesn't always mean a better value.